Good morning, traders. It is April 20th, Thursday morning. We are about 30 minutes into the open. I want to start off by saying that I believe the market is going to go down from here. So keep an eye on the S&P 500 on the right-hand side here. Big gap down. We're going to talk about the market in just a second, but first I want to take a look at our last two picks. OKTA was a short that I highlighted Sunday night. You can see that the stock has been able to hold its own, but it is relatively weak, orange line below zero. The caveat was that we wanted to see the stock below the 200-day and the 100-day moving average. That hasn't happened yet. We need that breakdown. We need to see that on a long red candle with heavy volume. If we had that, then this was going to be a nice short for us because we had this longer term upward sloping trend line that would have been breached to the downside, and we would have proven that we can take out this critical support level where the 100-day and the 200-day moving average converge. So no short. It's okay. I still think this is a stock that you're going to want to have on your watch list. Watch for this breakdown right here. Dell was a long that I highlighted. That was an excellent pick, but you can see yesterday it started to show some signs of weakness. So the video came out Sunday, and that was Sunday there, Monday, Tuesday, Wednesday, Thursday. So you had a couple of really nice days on the upside where you could have day traded it and made some decent money. The key also is the term day trade. Right now, you should not be swing trading. If you are swing trading, those days should span no more than 2 days. Overnights, okay, if you got some nice market movement. Other than that, the market really is range bound. So now we're going to take a look at what the heck the market's doing and why I believe a good short is setting up right now. We have this 1OP bearish cross right in here. And on a 5-minute basis, you can see how the market has been struggling just to get back to the low from yesterday. So let's take a look at the D1 chart right away, see what we've got going on there. Realize that off of the low right here, we really haven't seen any stacked green candles. That's what we want to see during a strong trend. We also want to see heavy volume. We don't have that. Not even close. Abysmal volume. So it looks good on the surface, and this all happened. This low right here came on the SIVB fail, that bank failure. The Fed injected about $1 trillion worth of liquidity into the system, and that greatly reduced risk. Well, so what? Well, if there's lower risk, then shorts are going to take some of their positions off. And so this is a lot of short covering as opposed to aggressive buying, where asset managers pound their fist on the table and say, I want to buy stocks right here. This is the last chance I'm going to have to buy these stocks at this price. The valuations are so compelling, I got to have them. We're not seeing that. So this is not aggressive buying, and that tells me that this bounce right here is nothing more than a bounce. Let's zoom out a little bit. I'm expecting this trading range to continue probably through summer. Stocks need time to grow into their current valuations. And right now, the QQQ has been leading the charge. It trades at a forward PE of 27. That is not cheap. That is rich. We still have a potential rate hike ahead of us. The Fed meets May 2nd and 3rd. That happens to coincide with Apple earnings and a lot of the mega cap tech stocks. So that's an important window for us. Are those tech stocks going to have more gas in the tank? I'm very skeptical, especially after a really big run. Let's take a look at QQQ. And look at how far QQQ has run in just a short time this year. Very, very big rally. It's starting to hit some trend lines, some resistance levels, And that would have to fuel the next move higher. I just don't see it. In fact, a lot of the tech companies are seeing a storm ahead and they're already anticipating that and laying people off. So we'll see what happens. Yesterday, Tesla came out, and I'm going to go right to that chart as well because that is going to be an excellent short. You can see this upward sloping trend line right here, breach to the downside, post earnings reaction, very negative, through that trend line, through the 100-day moving average, well below the other major moving averages. Let's put up the 50-day. I don't think I have that showing right now, so let's add that very quickly. And you can see finding resistance at that level. This stock has plenty of room to fall. And here's a kicker. Orange line below zero. It's been weak relative to the market even before earnings. Now, the volume has been light. Of course, the volume is going to be light because everyone's waiting for that earnings announcement. I think that you're going to start to see heavier volume. So if you've got Tesla marked as a weak stock, you want to be watching it tick for tick with the S&P 500. So now let's go into our S&P 500 5-minute chart and let's see what's going on this morning. So we've got this daily chart on the SPY. And we can see, again, not a strong trend. We're hitting this horizontal resistance level somewhere in the SPY 417.50 level, and we're not able to get through it. Lots of candles with overlap, mixed candles. That tells us that resistance is starting to build. We are not seeing long green candle, long green candle, long green candle. Sellers are not allowing that. They're keeping a lid on the market. So yes, there are buyers and there are sellers on any given day. If we go into a 15-minute chart, we can see that there has been a tendency when you get a dip and support is established, you get a rally. When you get a drop, support is established, you get a rally. Yesterday, we gapped down. Support is established very early, you get a rally. So we have bullish speculators right now conditioned into thinking that this is going to be a really good buying opportunity. And so they pile in early in the day. That makes them vulnerable to a sell-off. So that's what I believe we're going to see. But we don't come into the day and say, I'm just going to buy puts because this time is going to be different and the buyers are going to come in and they're going to get flushed out. If you did that yesterday and you just had this gut feeling, you got your head handed to you because all the market did was move higher. So you have to wait for those signs of resistance, and we're starting to see them. The OneOp indicator, there's nothing better than it. Yesterday we get this big gap down. You have this bearish 1OP cycle that runs. Now we have a bullish cross here where the red line goes above the dotted line. That's a buy signal. Support, 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 support. So the market compressed during this bearish cycle. That tells us that there's a decent bid and that the next bullish cross is going to produce. Nice. Now you get a bearish cycle that once again does not produce. This bearish cycle did not produce. That means this bullish cycle is likely to produce. This bearish cycle did not produce. This bullish cycle is likely to produce. And it lasts for quite a while towards the end of the day. Now this is not high quality trading, but the gap was filled and the market gradually extended its gains. So what I'm watching for right now is I want to make sure that on this bearish cross that the market has this wimpy little bounce and that there are signs of resistance. What type of resistance would I be looking for? What are the tells here? Well, first of all, if the market's struggling to get back through the low from yesterday, that's a pretty good sign because we want more than half of this gap preserved. We're not even close to that halfway point, which would be right in here. Let's call it the 413 level. Not even close. So as this bullish 1OP cycle completes, I want to start seeing some wicks, lots of wicks. That tells me that every time the market tries to rally into the gap, sellers come in. Try to rally into the gap, sellers come in. They keep a lid on the market. Then when we eventually get that bearish 1OP cross, we take out that low with ease. So again, remember, bullish speculators have been conditioned to buy dips. So they're going to be in there, buy, 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 buy. This all looks good. Look at this. We got a higher low double bottom. Everything looks good, but they don't have the 1OP indicator. So they don't see that this actually could have a bearish tone to it. So what we're going to be looking for is these tails just like that. And then when we get that bearish cross, we're going to be looking for that long red candle. And all of these buyers are going to get flushed out. And that gives us a chance to easily take out the new low of the day because they have to exit their positions in a hurry. Do also have some global weakness. Europe was generally weak on some ECB comments overnight, and Asia was also mixed, but tended to be relatively soft. So we'll see if this time is different. Every other bounce, once it establishes support, has gained traction and the market has been able to rally. So what gets me bullish? How do I go from, gee, I think we could have a bearish setup today to, yeah, this is bullish. Well, here's what I'd be looking for. I'd be looking for this weak attempt into the gap, and maybe we even start to fill a little bit more of it. Then I want to see a bearish cycle that runs where we preserve almost all of the gains, and I want to see those higher lows preserved. So we get that bearish cycle without much of any production. So hardly any drop in the market. Then I know that the next bullish cross is going to set up to fill some of that gap. So the 1OP indicator really helps us time our trades. Market first, market first, market first. We wait for those market windows to set up. And when they do, then we've got a fairly high level of confidence on which side of the market we want to trade. Then we find stocks with relative strength. If we're trading the long side, we find stocks with relative weakness. If we're trading the short side, that's how we trade. And so those relative strength, relative weakness stocks also provide us with cushion, because if by chance we get the market wrong, those stocks are going to provide us with extra cushion. I could show you some shorts from yesterday. So let's say that you came in yesterday. Let me give you an example. You came in yesterday and the market was in buy, buy, buy mode. Okay, but you think that the market is going to fall. So you are premature and you jump the gun and you short a stock. Well, if you shorted a stock like Cisco yesterday, you did fine, because on a daily chart, you can see how Cisco had broken major support levels. It had broken through the 100-day moving average. This stock was relatively weak. You would have spotted that early in the day. And if you shorted Cisco, even though the market went up, you did okay. But you got the market wrong, so you better work on that piece of the puzzle. That's the beauty of trading relative strength and relative weakness. Incidentally, I really like that Cisco chart, and it could be my short of the day. So we'll take a look at a couple of searches, and Cisco was coming up on red royal flush. That means that it is bearish across all timelines as far as our trade signals are concerned. I'm going to just flip through a few more of these, see if we've got anything else. VLO, that's a nice breakdown below the 200-day moving average. These are automated trend lines, by the way. We released these a month ago. Super, super helpful, very effective in helping us spot these support and resistance levels. And when they're broken, we want them broken on nice red candles with heavy volume. So keep going through, see what else we've got. That was a nice little gap down. This could be trouble later. It broke those support levels, so It's cleared the path, if you will. We know it can get through them. It rallied on that move, so you'll be watching to see if this retraces. ON was that symbol. So I would rather see a stock that takes out those support levels and never recovers like Cisco. CV, CVS, WDC, kind of same deal. Nice trend lines here. Breach to the downside. Stock already below all the major moving averages. Yeah, WDC, that could be a really nice short. Already weak relative to the market. JD. So yeah, out of the ones that I've seen in this one search, I've got to run with CSCO so far. Gonna look at a couple of others here, just skimming through to see. And this is the process of flipping charts. We want to see stocks with nice orderly price action. Let me just go through here and see if I've got anything else popping up in here. BCRX, yes, that's been weak also. All right, we can take a look at some of our bearish SMA crosses. Tesla's going to be fairly weak. Let's talk a little bit about Tesla. So you come into the day and you go, hey, Tesla's going to be really soft. Look at that nice breakdown below the 100-day moving average. Now what you want to do is you want to compare Tesla to the S&P 500. So what has Tesla done? It bounces with the market. So there's your first bar for the S&P 500. Okay, Tesla mirrored that. Now, all of a sudden, you have some bearish hammers here. Okay, Tesla pulls back a little bit. This is the tell right here. You see how we made a new high for the day on the SPY? These two long green candles. What did Tesla do? Huh, couldn't get back to the high of the day. There are sellers here. Tesla's a good short. Tesla could be my short of the day just as easily as Cisco. And maybe I will make Tesla the short of the day. And since we're talking about Tesla, might as well talk about Elon. Elon owns SpaceX. SpaceX, huge launch today. So look for that on YouTube. The largest rocket ever launched. They got it off the launch pad. That was their objective. Really exciting as far as the future. But in any event, Tesla didn't look so hot. So this is a nice little breakdown, and it's got lots of room to run. I'll give you two of them. Tesla and Cisco both look like good shorts to me. So let's shift gears. Let's look on the long side right now. Here's the difficulty with trying to find a good long right now is that all ships rise with the tide. So we've had a market that's been moving higher. So we're going to see stocks with relative strength where maybe some of that is a little bit fake because of this move right here. But what we don't want to see is we don't want to see stocks that had a big gap down like this. We want stocks that had a tiny little gap down and that were able to find support very early. Some might not have even gapped down. We're in earnings season right now, so we're going to be looking at a lot of earnings plays. Those are going to present some excellent opportunities. Costco through the 200-day moving average. So here's the problem with Costco. You look at the chart and you go, choppy, 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 all over the board. Today it looks good, tomorrow not so good. Today it looks good, tomorrow you can't make heads or tails out of it. So Costco is not a great stock to swing trade, but it does make some pretty decent moves intraday. This is a nice intraday move. I'm not going to feature it. Stack green candle, lots of nice stack candles in here. So why the heck would Costco all of a sudden move like this? They didn't have a rocket launch today. I mean, what could justify having stacked green candles like this on massive volume? You'd want to investigate it, but we already know from the daily chart that yes, Costco does make these big, long moves like that, but then it gets right back into choppy mode. So, store openings, I mean, what is it that's going to all of a sudden in one day make Costco so attractive. So it also depends on which sector the company is in and what their business model is. Some companies like McDonald's, if you start seeing big spikes in it, well, those stocks are going to retrace. Other companies like biotechs, they could have some material news that was released, and those stack candles can continue for a long time because the news is material to its earnings, to its future outlook. So know what you're trading, know what the underlying stock is and what the company does. But we're going to keep moving along because I'm not, oh, that's a nice one, DHI. Home builders doing quite well. Nice breakout here through resistance. PHM was another one that was hitting our list yesterday, a lot of our lists. So let's take a look at that one. I'm sure it's continuing higher. These are all really strong stocks. This is the type of price action we want to see. Nice, orderly tick higher because we can predict those moves. We can predict where the stock is going to go with a high level of certainty versus something like Costco, where it's all over the board. And we know that if we take a swing position, we can expect to take some heat because the stock constantly retraces. Well, we don't want to have those gut checks all the time. We want stocks that continue to just grind, grind, grind higher. Lennard, another nice breakout. Yes, these home builders look good. My only issue with telling you, and these could be the longs of the day, my only issue with home builders, and you could see that they go dormant, meaning very compressed price action. So they're not going to make big moves. Consistent moves, but not big moves. So we've got Win. I'm just flipping through. And this is the process that we go through. We just start looking for these charts. We start looking for these trend line breaches. UPS, this is a nice little breakout right here. Earnings coming out on the 25th. So we got about 5 days. Also can be choppy, but this is a nice horizontal breakout. Volume could be better also. Fairly light volume. Continue to look here, looking for nice breakouts to the upside. And in the meantime, I'm watching through the corner of my eye. I'm watching what the S&P is doing. We're starting to see it stall out. You see how 1OP is starting to flatten out here. It's getting ready to roll over. So we'll see if we get that market decline. Cisco and Tesla would be two stocks that I'd be looking to short. Just flipping some charts. I'm going to just go through and look for stocks that I know have good volume. And we're going to be looking at heavy volume here, NUE. This one could be a pretty good prospect. Earnings before the open today. It's got some horizontal resistance to get through. It makes some pretty wild moves. So I'm going to just keep looking. The home builders right now are my current favorite that I think you can trade and get behind these moves, but you have to be a dip buyer. GE. All right. I'm going to look at a couple more searches here. And I'm going to continue to try and find something that looks really attractive. Netflix recently announced earnings. Until it gets through that, no reason to even consider it. And I think the home builders might be the stocks that I go with. And we'll take a look here. Haven't looked at Nova. It's poking through. Choppy stock. KNX actually looks pretty decent. Getting through this downward sloping trend line right here. Earnings after the close today, so that we want to avoid. MS, and there you can see it had earnings before the open, getting through that trend line right there. It's above the 100, above the 50-day. Yeah, this could actually be a nice, You can see earnings before the open yesterday. So it had an initial negative reaction and a gap reversal. So again, what is the tell? What is the tell that this is the real McCoy? Remember how I said earlier, we don't want to see stocks that are down big today because that's what the market did. What did this stock do on that big market drop this morning? All of the losses overnight were erased in the first bar. What did the stock do when the market started to go up? Grind, grind, grind. Now you can see that Morgan Stanley, it's a financial stock, so it is choppy. It moves up and down. You do not have to chase stacked green candles. So here's the setup that I'd be looking for today. Morgan Stanley is your long pick of the day. And here's what we'd like to see. Banks have reported earnings. There are no signs of a credit concern. They pulled back hard on the SIVB news, so they've got room to run to the upside. I love the fact that this reversed yesterday, and today those buyers were very aggressive. You got this big gap down in the market. There was a big gap down, an initial reaction yesterday. Bye bye bye. Bye bye bye. Bye bye bye. Bye bye bye. Today, when some of the sellers who were aggressive here had a chance to sell, 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 knock that stock down. I am a huge seller of Morgan Stanley. Where were they? They were nowhere because the buyers are the aggressors and they scooped everything up that they could get. So what you want to see is, just as I pointed out earlier, if the market puts in a bullish day, here's the pattern that I'll be watching for. This bearish 1OP cross does not produce. From the bearish side, I want to see long red candle, long red candle, long red candle, new low of the day. All the bullish speculators who piled in and bought the dip early today because that's what's been working for the last 2 weeks, whoosh, they get flushed out. So that's what I'm looking for on the bearish side. And I want to see the open of this long green candle erased with ease, long red candle through it. Then I start nibbling, then I start shorting Tesla, Cisco, and similar. If I don't see that, and instead I get just tiny little mixed candles that kind of come back, and maybe they take out this open of this long green candle, and they find support right here around the 1160 level, well, then I know that this bearish 1OP cycle did not produce, and that the next bullish 1OP cycle will produce. It'll take out this high, and it'll fill some of that gap. If I see that pattern, I'm going to be watching for Morgan Stanley to come back in. Maybe 1OSI gets to zero, a little bit below it, crosses back above it. Then I know I have an excellent entry point for a stock that wants to go higher. Thanks so much for watching, everyone. I'll do my Sunday night video. Good luck with your trading. Those are the things you need to be watching for. Market chopping right now. Technical resistance level. Lots of news coming out in the next couple of weeks. Got the FOMC earnings is really going to crank up next week. So I'm expecting still, yes, a decent market bid, but lots of back and forth sideways price action. So excellent day trading opportunities. Still nothing really setting up on the swing side. Again, thanks so much. We'll see you in a couple days. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.